So, what's going on here with Palantir? Well, Palantir is leaving the New York Stock Exchange for the NASDAQ. Palantir stock is gaining Friday on its plan to switch its listing to the NASDAQ Stock Exchange. Investors seem to be hoping the software company will gain from the stock getting added to the NASDAQ 100 and funds being forced to buy its shares. Kind of similar to getting added to the S&P 500, right? Because a lot of people just buy the QQQ, they just buy the NASDAQ 100, right? The company said it will transfer its stock to the NASDAQ Global Select Market, switching from the New York Stock Exchange on November 26th. So this is coming up very soon here. I mean, we're talking less than 2 weeks from now, right? About a week and a half. Palantir stock's up, obviously, as you guys see, 8+%. The stock already gained more than double this year amid excitement about its artificial intelligence capabilities and its entry into the S&P 500 in September. Palantir said it also expects to meet eligibility requirements for the NASDAQ 100 index, which comprises of 100 largest non-financial companies listed on the exchange. That could drive buying from funds which track the tech-heavy index. Palantir would rank the 31st in the NASDAQ 100 based upon market cap of roughly $135 billion. So now its market cap's getting even bigger, which basically means there's going to be even more forced money to buy Palantir once it gets into the NASDAQ 100, right? Which is a huge deal for the stock price, there's no doubt. Is this as big as when it got into the S&P 500? No. However, this is still a big deal. There's no debating that. Like for Palantir stock price in the short term, and actually over the long term, it's very beneficial. Because you got to understand this, there's people that week in and week out put money into the S&P 500, people week in and week out that put money into the Qs, right, into the NASDAQ 100. And so if Palantir enters that as a 30th biggest stock or top 30 type stock, it's going to be a lot of forced money that's going to be going into Palantir over the next, we can call it, basically from when they get in at the end of November all the way through the end of the year. So the momentum in Palantir stock, as bad as I want Palantir to chill because I really don't want to sell any shares, the stock is likely going up more over the next month and a half. I'm just going to be honest with you guys. Never mind if Nvidia comes in and rocks everybody's world next week, which could happen, right? And you get a lot of excitement in the tech sector as well. You get excitement in the tech sector, then you get Santa Claus rally and Palantir getting added to the queues. I mean, my gosh. Like, is a potential it's going to 70, 75 in the short term. So that's extreme. But that leads us to the next problem or question, right? Valuation, right? So here's what we're looking at. If we want to start running some numbers on Palantir, they just did a 30% growth rate, right? Let's assume they can keep that 30% growth rate up in the future here over the coming years, right? Now, net income should far outstrip the revenue growth. So let's say they could grow net income at like a 45% clip over these coming years. Now, for a company like Palantir that's kind of more SaaS related, growing 30% top line, 45% bottom line, you're going to probably pay, I would say you're going to probably pay somewhere between about a 70 and I would say about 100 PE ratio for that sort of company, right? You could even go up to a 110. So let's take it to a 110 on this baby, right? Because that's just an extraordinary growth rate, far exceeding the market. It's not even close. And then for a business model that's seen as stable, right, you're going to pay up for a stock like this in quite a substantial way. So we can see here, if they grow year in and year out, 30% clip, right, and 45% clip on the bottom line, and you do a PE ratio of 70 to 110, you see you get a decent compounding annual growth rate out to 2028. But you can see over the next few years, you might not get the most exciting gains, which is certainly something that could happen with Palantir, right? Where this stock could still get you good gains over the next, let's say, 5 years, but over the next 2 or 3 years, the stock does absolutely nothing. And all it does is flounder, and that's a realistic potential, especially given that there's really no levers left now for stock price appreciation outside of the numbers going more insane and let's say pushing to like if Palantir pushes to a 40% growth rate, right? So that would be a major acceleration from here, which their business is already booming. And let's say they get pushed like a 55% net income number on average, right? And I mean, then people are willing to pay like a 90 PE on this stock. Because, I mean, you know, if you're talking about those sorts of growth rates, that would just be insane. Whoops. We're going to put a 90 here, right? And then let's say up to probably about a 140 if they're actually able to continually grow at those sorts of numbers in future years, right? And this would be a pretty extreme situation. I mean, geez, that puts you at a pretty high P ratio. Now, let's say growth rate tops next year at like a 37% number, and then it goes down to like 32% for that year, goes down to like 29% for that year, and let's say goes down to like 27% for 2028, right? And let's say net income growth next year is like 57%, then they kind of slow down at about a 42% clip, kind of like a 39% clip, right? And then like a 37% clip. So you have slowing growth over the years, so you might be willing to pay like 90 to 140 here. Here you might go down to, let's say, 80 to like 120 PE here, right? And then let's say 2027, you might go down to like, let's call it like a 75 PE to maybe 115 range here, right? And then 27, 37, we could say now you're going to pay, let's say about a 70 to about 100 PE for Palantir here. And what you're going to find is, just the chances you're going to make money in the stock the chances you're going to make money in the stock after 2025, especially if the stock continues to roar higher here into the end of the year, right? The chances you're going to make substantial money in the next 2 or 3 years is pretty low. Can Palantir still be a big money maker 5 years out, 10 years out? Yes, that's still a realistic potential. But in terms of the next 2 to 3 years, if this stock keeps rolling and it goes to $70 plus, I would not expect, as a Palantir shareholder now for several years, I would not expect big gains after this year, essentially. I think we could have kind of, just a crazy blow off top, the Q's edition, and maybe we go 70, 75, and then I think we set up for, really regardless of how great the numbers are, I think we set up for a tough 25, 26, 27 when it comes to stock price, where the company could be making tremendous progress on their top line, tremendous progress on adding more customers, and tremendous progress on the bottom line. But the stock price is not really going anywhere. That's in my opinion, a realistic potential on what could happen with Palantir after this year. So we'll see where all shakes out. But as far as me and my positioning, like if this stock starts to push to 70 or 70 plus, I'm going to have no choice but to cash out. I would say cash out 1,000 shares. There's no choice. There's no other way out of this one. Because the setup was just going to be brutal past 2025 for the stock. I mean, absolutely brutal. And so that's what I would probably end up doing. And so that's why my hope is the stock stops going up here in the short term. But if it just keeps, this happens with stocks sometimes, right? They go through these very exciting cycles. It happened to Tesla. I mean, you want to know the story of Tesla. This is the exact story of Tesla, right? Tesla was a company that, numbers were all going amazing. And additionally, we had all these exciting things that were going on. And we were being added to the S&P 500 and getting added to different NASDAQ indexes and getting added to all these different ETFs and those sorts of things. And it was great for Tesla. And the stock was just skyrocketing. It went to $400+ in that cycle, right? And then suddenly, Tesla started to have growth weaken, right? And growth started to weaken more and more as time went on, as far as the growth rates of Tesla, right? And then we already passed kind of the hype cycles of S&P 500 and NASDAQ inclusion, all that stuff. And what do you have to show for it all these years later? This stock is at the same price it was back, over 3 years ago. And think about the progress the indexes have made over the last 3 years. And this stock is the same price it was over 3 years ago. And it's still significantly off those all-time highs that were 3 years ago, right? The all-time highs were made in November of 2021 at well over $400. And we're still a long way from that $400 level. So, I mean, we could be looking at 3.5, 4 years, if not 5 years, between when we reach that last all-time high to the next one. And so that's what I talk about with Palantir, where Palantir stock could, obviously have this blow-off top happen here, let's call it in the next month or two, and then we set ourselves up into a really tough situation after that, where, the stock just kind of doesn't do anything for several years. And that's no fun to go through that cycle, right? Because it's one thing to say, okay, maybe the stock doesn't do anything for a year, maybe the stock doesn't do anything for a few quarters, a few months, that's fine. But what about if a stock doesn't do anything for 3 years, 4 years, 5 years, like Tesla's done, right? And that's definitely the potential I see for Palantir here, and that's what makes it like, dang, man, I might have to take some more profits on this one if this baby goes to like 70, 75. Like, it's just, And then after that, then I just hold the rest of the shares for a long time term, kind of like I've done with Tesla. So tough decisions, man. And that's some of the toughest decisions you're ever going to have in the stock market. As somebody who's been playing this game for 16 years now, some of the hardest decisions you ever have are a situation where you love a stock a lot, you really don't want to sell it, but it's just priced in so many years of future growth that you start to become, you start to like look at it and you're like this stock is priced so ridiculous that I have to take some profits. And it looks like we're starting to approach those sorts of levels in Palantir, especially if this one continues to push. So we'll see what happens, but if we push this baby to 70 or 75, don't be surprised if I cash another 1,000 shares or 2,000 shares and then just hold 3,000 or 4,000 shares in the public account for the super long term, right? Which, might not be the most exciting next few years in regards to, the numbers, right? So that's kind of what's going on there. Hey, it's Jeremy. I hope you really enjoyed that clip here today. Would you like the ability to understand how to do your own research and not just rely on others to tell you which stock to buy? Would you like to have confidence in yourself when it comes to making your own investment decisions out there? If you're going to be able to do that, you got to have full understanding of everything you need to look for in stocks, how you can decipher whether a stock is a buy, not a buy, all those sorts of things. That's where my private group comes in to help. The description area down there will have a link to apply to join my private group. We've taken over 1,000 people over time and been able to teach those folks exactly what to look for in companies, how to research companies, how to understand financial statements, understand all the different metrics so you can make judgments on companies. And we've been able to have so many people, an incredible amount of people, hit 6 figures plus in their portfolios, 7 figures plus, even some hitting 8 figures plus in their portfolios over time. So if you're looking to take your game up to the next level and play this on a much higher level, apply for my private group. Once again, the link is in the description area. AMD, Advanced Micro Devices, $138 stock. This is not a stock I personally own, but my gosh, I've done a lot of work on the stock over the past, I would say, few weeks, and I think there's a big opportunity here in regards to AMD. Okay, so AMD, obviously, we're at the beginning innings of a decade-long, if not multi-decade cycle in regards to these incredible chips that can help AI in many different verticals. That's going to go way wider than just LLMs. Like everybody talks about large language models today, this is going to go way bigger than that. And obviously, NVIDIA's beaten AMD to the punch. And NVIDIA's the big dog in the market, right? It's approaching a $4 trillion market cap, and they've won. They've gotten first place, and they're going to continue to get first place. But just because they got first place doesn't mean no one else succeeds. AMD is a number 2 player in this market, and I think they're going to carve out a phenomenal market, and they're going to play a lot of catch-up over this next few years. And so you're going to see a much bigger revenue acceleration likely in AMD over the next few years, and bottom line increase in regards to that percentage as well than NVIDIA, okay? So when we look at AMD, forward P 27, 2-year forward P, which honestly analyst estimates are probably way too low on that 2-year. We're probably trading way under 20 right now. But even if we went with analyst estimates, 23. Next year, expected earnings per share growth is over 200%. Next year, revenue growth expected is about 28%. Okay, keep those numbers in mind here because you're going to see some projections here in just a moment and realize, oh gosh, like AMD is a pretty big opportunity, right? Now, when it comes to AMD, great balance sheet on this company, by the way, and it's just a phenomenal next decade ahead for this company. But this company is going to be on a rocket ship ride, specifically 2025 through 2027. So looking at 1000xstocks.com, we're taking analyst estimates for the coming quarters in here, right? And look at how that revenue is expected to skyrocket over the next several quarters. And I think that's going to play out all the way through 2027. Okay, keep in mind, after 2027, AMD should definitely continue to grow revenues as well. It's just that rocket ship ride of just incredible growth is really going to be over this next few years. Now, additionally, if you look at what's expected to happen in regards to earnings per share, same exact phenomenon. We're about to see a skyrocketing in earnings per share, right? This is where we're at right now, and this is where we've been at for AMD, right? Now, check out these projections here and get ready to have your flapjacks flipped. So, next year, 27% revenue growth roughly expected by analysts. They're probably doing 30% plus, by the way, but I'm not going to go there. We're just going to run 27%. And analysts are at over 200% growth in the bottom line for next year. So I did that, okay? Then after that, I just went with a 20% top line and a 20% bottom line. Now, those numbers are probably pretty conservative regarding AMD for this next many years, okay? Probably very conservative. So, I went conservative across the board. I went under analyst estimates on both those, and honestly, this is pretty sleepy numbers for AMD from 2026 to 2028. But you run those numbers, right? That puts them at net income margin around 27%, which is about half of NVIDIA's. NVIDIA's running a net income margin right now of like 50+%. It's ridiculous, right? If we run this company, if they're growing top line, top 20% on average a year, and bottom line 20% on average a year, 35 to 45 easy P ratio to command if you're a company that's growing 20% top and bottom line. Cake, okay? Check out the return profile of AMD. We're talking about a compounding annual growth rate on the low end of 24%, high end of 32% for AMD. Oh boy. And I think I went with conservative numbers across the board. So, the moral of the story is Jeremy needs to get buying some AMD stock because, my gosh, pretty big opportunity there. Hey, it's Jeremy. I hope you really enjoyed that clip here today. Would you like the ability to understand how to do your own research and not just rely on others to tell you which stock to buy? Would you like to have confidence in yourself when it comes to making your own investment decisions out there? If you're going to be able to do that, you got to have full understanding of everything you need to look for in stocks, how you can decipher whether a stock is a buy, not a buy, all those sorts of things. That's where my private group comes in to help. The description area down there will have a link to apply to join my private group. We've taken over 1,000 people over time and been able to teach those folks exactly what to look for in companies, how to research companies, how to understand financial statements, understand all the different metrics so you can make judgments on companies. And we've been able to have so many people, an incredible amount of people, hit 6 figures plus in their portfolios, 7 figures plus, even some hitting 8 figures plus in their portfolios over time. So if you're looking to take your game up to the next level and play this on a much higher level, apply for my private group. Once again, the link is in the description area. Meta. Don't let the gains fool you. When I show that $779,000 gain, the 386%, don't let that fool you. There's major gains still coming for the stock. This stock is likely going to be $1,000 plus in 2025 or 2026. It's going to hit $1,000 first for the first time ever in one of those 2 years. Okay, and I'll take you through the projections in just a moment to show you how that's going to happen. It's actually pretty easy how it's going to get there. And then the stock's going to do its next double up. It's going to go to $2,000 plus a share, likely in 2029, 2030. Okay? So, let me show you what we're looking at from Meta. I went with 15% revenue growth on average per year. Pretty doable number. Meta's been growing revenues at like a 20% plus clip. I have them doing, slowly slowing down as the numbers get bigger and bigger and as they scale to $200 billion plus of revenue, right? So going down to a 15% number on average, 2025 to 2028, okay? I have them doing net income growth at 20%. They should far outstrip the revenue growth. They're keeping cost downs in a major way. And so every bit of revenue nowadays means much more the bottom line of Meta than it used to mean, okay? So net income growth of 20%, I think, is pretty in the bag. That puts net margins of this company around 42% come 2028, which is definitely a doable number considering where their net income margins are at now. They're already reaching high 30s now at this point in time. Now, if the company's got 15% revenue growth, 20% bottom line growth, a 30 to 40 P's in the bag, that's easy peasy. That's lemon squeezy, okay? So check this out. That would put the stock at $1,000 plus, and once again, either 2025 or 2026. It depends on what type of valuation multiple they're going to get in 2025 or 2026. But in 2026, the stock, I would say, is likely to be somewhere between about $1,000 and about $1,300 in 2026. But there is a potential the stock could reach $1,000 plus in 2025, right? Now, if we go out to 2028, right, we're looking at a stock price that's likely between $1,400 and about $1,900. And remember, I told you the stock's going to likely hit $2,000 plus a share in either 2029 or 2030. This is why, right here, because you keep running these projections out and you realize, okay, 2029 or 2030, the company's likely then $2,000 plus a share. So we got a double coming here in likely the next 12 to 24 months. And then we can say about 36 months after that, roughly, we got another double coming in this one, okay, which is pretty darn exciting. So compound annual growth rate on this company could easily approach 25%, could even approach 35 or more percent for the stock overall. So when it comes to Meta, it's just easy to throw it in the filing cabinet and not worry about it. They own Facebook, the giant. They own Messenger. They own Instagram. They own WhatsApp. I mean, this company owns communications. Like, has people realized that yet? They own Llama, right? Which the Llama model could end up eating OpenAI. Not a lot of people have even started to play that game yet, but if you talk to a lot of the high-level folks in Silicon Valley, they're starting to realize, oh my gosh, like Llama might end up eating OpenAI. And the one that might benefit the most from all this AI stuff that everybody's talking about might actually end up being Meta in the end. They own MetaQuest, which is clearly the winner when it comes to VR and AR, right? With that headset, they're clearly beating everybody in the market. Meta glasses, which are a huge success, that they partner with Ray-Ban on there, which are those Meta glasses that have cameras attached to them. They have, basically microphones that you can talk through them and listen to music, everything like that. It's been an incredible success. They have grade A plus financials in this company, and you got a top 10 business genius in the history of business leading this company. And he's just entering the prime of his career. Like, that's incredible. He's just entering the prime of his career, and he's already a top 10 business genius of all time in Zuckerberg, right? So, Meta, phenomenal setup. Throw it in the filing cabinet, make a ton of money, and don't even worry about the dang stock over the next decade, right?